Hi everyone. As a part of the ongoing open house series with industry experts, I have great pleasure in talking to someone who I look up to and I reach out to for every piece of advice with respect to lending. I welcome Dr. Ravi Modani. This will require some introduction. He is a CEO and founder of One-to-One Finance, India's first NBFC factor. Was announced by RBI regulation in Jan 2022. They are solely focused on factoring and working capital for MSMEs. That's why they are very, very relevant to what we do in Oken. His goal in life is that every MSME should be financed and they should get working capital finance. He is a PhD in working capital management. He's run business in 5 countries. He's turned around uh, dormant companies into successful ventures. He's a speaker in various groups. He's the manager. He's the past president in Thai Rajasthan, and he's also won numerous awards. One of them being the Global Best Chapter at Thai Global Summit in Dubai. Uh, we can keep going on and about his achievements, but he's a very relevant person in the lending space, especially with respect to MSME financing. More because not only he's an entrepreneur, he knows things, he's lived it, he runs businesses, he has a complete 360 view on everything with respect to MSME financing. So with that introduction, I'll leave it to Dr. Modani to say to talk about one-to-one finance. Right? So I believe one-to-one finance was born out of a mission, and I can't do justice to it. If Dr. Modani, you can talk about one-to-one finance and yourself.
Thank you, Sagar. Thank you so much for having me here. It's really an honor, privilege, and delight to be part of Oken and this open house podcast for the Oken. In fact, I'm so excited with the entire concept of lending to MSMEs because, see, I'm a third generation entrepreneur, right? So I've seen in my 35 years of working experience, I would say 3 or 4 phases of the how the working capital or the MSME lending spans out in India, right? There was a phase prior to 1991 where there was a typical bank lending on a cash rate basis, where they used to physical pledge, go downs, hypothecation of the stocks, that was the core of the lending. And then came in 1991, which was the liberation movement. And that's where the entire go down and the pledge thing went for a toss. It all became hypothecation and, that unsecured lending started to grow in India. That was, I would say, phase two. Phase three was typically, I would say, unsecured lending pushed by a lot of government schemes in the last few years, maybe around 10, 15 years, which includes Mudra, XYZ, right? And now we are into a phase four, which is the most important phase right now. If you think in a lending perspective, everybody wants to do a secure lending, right? So earlier the collateral security or the inventory would be a security. Today, the information or the data is a secure, the collateral. So any entrepreneur, any MSME uses the information data as a collateral security. Let me tell you how it all panned out. So being a third generation entrepreneur, I realized my family business became bankrupt and realized that was a reason of a mismatch of a short-term and a long-term fund. And that got me into the, I did my doctorate on working capital management just to see what went wrong with our businesses, right? Post that, I've been doing business into many countries. And I went to South Africa, took over a company in 2009 and 10. And that's where I met a banker over there. And as usual, any Indian company would go and say, Ki, I want a CC limit for working capital, which is a cash credit limit. I went to my banker and asked him, I want a CC limit. And he was like, what is that? Because it's a typical Indian word, right? So he asked me to give me a security, give me a collateral security, which I did not have in South Africa. Right. So immediately he offered me a product, which was a receivable financing based on my receivables. Right. So he gave me 2 products. One is receivable finance, which is basically a transaction-based financing, or factoring. So we'll come to factoring later on, but I'm just trying to say the evolution happened the way it happened, right? And so we had an NBFC in a family, which we were not running it like a professional thing. So with all the experiences, I realized that there's a very big pain point between MSMEs to do a B2B transaction-based financing. So this single point mission to provide working capital short term. So the shortest term working capital is the most difficult to get for anyone. I mean, I'm talking about, let's say 5 days, 10 days, 12 days, 15 days, right? So, or whatever, even 90 days. The conventional banking system or the NBFC system is made to make a book building process. They want to have bigger assets, the AUM is the matrix. So we have been like in the last 8, 9 years, always on the other side, people ask me, what is your AUM? And I would say, don't compare me to an AUM, just compare how much disbursements am I doing, how many loans am I giving. The churning is more important because it's a working capital cycle. So those are learning which we started from. So our single point mission, it was difficult to manage, but yes, B2B short-term working capital, and short-term could be as short as 4 days, 5 days, 3 days, whatever it is, right? So that's the background where we all started and still focus onto that thing.
Interesting, very interesting. We also keep getting asked about saying that we want to build a book. Why should we come on Oken?
Yeah.
So,
So I'll just give you a small context over here. I've seen normally whenever you're making a book-based lending product on an AUM, at the best case scenario, any NBFC or any bank would be doing let's say around 0.5 or zero point 0.6 times of the book as a disbursement. So for example, there's 1,000 crore AUM NBFC, right, or a bank. They will be doing 600 crores or 700 crores of disbursement every year. On the contrary, when you talk about working capital, right? So we do almost like 6 to 7 times in a year. So if my AUM, let's say, for example, hypothetically is 1,000 crores, I would be doing 8,000, 7,000 crores in a year, right? So that churning of the money, the velocity of the money, and there are a lot of parameters which we'll discuss once we go on in this talk, why the short term is less risky than the long term, right? So that is the context where we are purely focused into.
so you mentioned, and I'll not get very technical in the beginning, but you did mention transaction to transaction banking. It is very important, and you saw that in your experience as well. We have one of the best in class GST systems, and would you want to talk about why invoice by invoice based financing versus working capital? Both have their space and both have their pros and cons. Uh, in your opinion, why is it important to leverage the data points that we have? If you can get into a little bit more details with the GST based systems.
So, Saga, it's a very, very interesting question. I'm telling you, see, some in technology or in term evolution, when you talk about, right, people or the technology or the company or the governments which came in late have always an advantage for that matter, right? So I'll tell you, India came in late for the GST technology as compared to the world. But probably to the best of my understanding, the Indian GST system is the only system on the planet wherein you match each and every invoice, output, input, connected to e-way bill, all that end-to-end spectrum of a invoicing mechanism, right? So that's a very interesting model to do. Now, why it becomes more relevant is, let me just take you back 15, 20 years ago, where there was no online banking, where there was no RTGS or NEFTs, right, for that matter. Conventional working capital, there would be a drawing power set by a banker. And whenever we are issuing a check, the check will go to somebody at the bank, at the back end, who will verify the, typical end use of the check which has been drawn to. And whether he'll pass or he may stop the check or maybe reject the whatever it is, right? But once this online banking started, the RTGS started, we all have got net banking. Now, even though let's say, for example, the bank is giving me a 10 crore CC limit, but on the fly, the money when I'm using, there's no verification on the fly. Post analysis, once I become an NPA, that can be taken care of. I can be termed as a willful defaulter, and all that stuff can be done, right? But at that point of time, there's no control, in terms of where the money is going. And that is where this transaction-based financing becomes a very crucial part. Now, when you talk about transaction-based financing, the only transaction in working capital, whether you buy or you sell, is an invoice, fundamental invoice, which is, and now with the GST and e-invoicing going down to, let's say, 5 crores, which is nothing, I can share you a small data point on that matter. In India, there are 6.3 crores, that's, MSMEs, right, in the country, out of which almost like 6.3, so it's 6.33 crores MSMEs, out of which 6.3 are micro enterprises. That's a very, very interesting point. Only 3 lakh are small enterprises. So forget about the medium ones. Let's, forget about the medium ones. But when you talk about GST data, 97 lakh your MSME registered in India. So 97 lakh, it's only 9.7 million, right? Now, out of that, only 111,000, or 17,000. This data is 2022, 23, right? So there might be some additions, but only 117,000 businesses in the country have got more than 50 crore business turnover, So that means 9.6 million, which is 96 lakh registered MSMEs in the country are micro and small, and they are doing a humongous number of transactions, on terms of GST invoices. And I mean, so 65% of the entire GST invoices are being done by the micro and small enterprises, which is a big set. And these are the real people who require financing. They are not rated. They are not the larger corporates. They are not even the startups where the VC or the PEs are pumping money. They are the real, for me, what I call MSME. For me, MSME is my sweat is my equity. So these are the guys who are putting their sweat as their equity, right? So they are the real, and the only equity which they have got is the transaction, which data, and this data is becoming rich day in, day out with all the multiple data sources, right from the unified logistics, Vahan portals, medical data, everything is being connected with the GST invoicing, so the account aggregator for them. We'll speak about account aggregator or maybe the DPI as well as we go forward. So this transaction-based financing, and the moment you are doing a transaction-based financing, you have an end use. Money is going for what it's being sanctioned for, also where the money is coming from. I'll give you an example. The cheapest lending in the country happens for a car loan, because we know when the money is being lent, the transaction is an end use, which is a car, which is registered at the RTO, right? So there is no way somebody can go away with the car or play out with this money. So if there's a transaction which can be verified with the end use, nothing beyond that. So you are just de-risking the entire model. So that's where the evolution of a transaction-based financing, and that has been a core from day one itself. So we have, I would say, since 2015 or 16, we haven't lent anything which is without transaction, whether it's on the receivable side or whether it's on the payable side. So anything has to be a transaction-based thing.
Very interesting. So talking about, you did mention account aggregator DPI. Let's delve a little bit more depth. There is a fantastic effort done by the government in the shape of TReDs, and it has been doing quite well. It has picked up. There's a lot of buzz around it picking up even more, and hopefully it does very well. And obviously by now people know about Oken, and we are talking about Oken. What do you think? I mean, people compare saying that Oken is TReDs. Why is Oken required if TReDs is there? Will Oken replace TReDs? What is your thought on it? Without, unfiltered thought on it, right?
So a very interesting comparison or a question to compare Oken and TReDs, right? For me, let me just explain what Oken for me is or what Oken can become tomorrow. Like, what UPI is for India for payments, Oken is for credit. Maybe we are sitting at the opportunity which is so humongous, right? Now, coming to TReDs, trade is fundamentally meant for MSME sellers and the larger buyers, corporate borrowers and buyers. That's number one, right? That's number two. Only people who are into factoring can be, only factoring transactions can be done on the trades. That's the most important regulation which is involved into trades, right? So any factoring company can only be a participant as a financer on the trades, right? Thirdly, the velocity of the network, the open network, the advantages of the open network, like in UPI or Oken, is not available on trades. So by the way, as one-to-one, we are active on Oken, and as one-to-one, we are also active on the trades. So we have being a factoring company, we do also operations and lending on trades, right? But I see what happens is basically, if you see if you want to create a bigger fortune, the fortune is always at the bottom of pyramid, right? We have seen that coming up from all across the world. Sachets, the shampoo sachets is the biggest example across the world. So the moment you micronize the transactions, there's a bigger market. People make more money on that, right? So trades is about wholesale lending. So they are maybe the corporates are the topmost corporates or the rated companies on the world. So the most important as of now, only the rated companies are the borrowers or the buyers on the trades platform, right? Which is, as I mentioned to you earlier, a very minuscule number in the entire ecosystem. There might be 20,000, 30,000 or MSMEs being registered as sellers, but on the contrary, if we see the number of borrowers and buyers, may not be more than 2,000 or maybe 4,000 on their trades. Is that India? Imagine the size of India, what we are having, what you're talking about. So Oken is made for probably the 6.3 crore MSMEs in the country. That's the opportunity for Oken.
So in effect, what you're saying is that trade is for the top of the pyramid, the bottom of the pyramid would be okay, and both will meet the credit gap somewhere in between, where we will someday hopefully have credit for all MSMEs.
I think that's exactly, you're right. You're absolutely right. It absolutely makes sense. Absolutely makes sense.
You mentioned one thing about factoring, and TReDs is only for factoring. Can you get a little bit more technical and explain that for the general audience?
So very interesting. I'll tell you, factoring started to evolve in India in 2011 with the Factoring Regulation Act, right? So that was I would say, the version 1 of factoring in India. And now we have Factoring Regulation Act modified in 2022, so 2.0, right? Now, fundamentally, there's a difference between unsecured lending and a secured lending, right? So factoring is in a way a secured lending. People don't see it that way, but it's a secured lending because you are selling an asset, you are selling a receivable. Somebody is financing you against your receivable, right? Unlike invoice discounting, which is an unsecured loan, here as a factoring company, I am buying a receivable, right? I'm buying the receivable and I'm giving a finance against that receivable, seeing the quality of the receivable, right? So if it's coming from a triple A rated buyer, it's a fantastic receivable. There might be a zero risk. If it's coming from an unrated buyer, there might be a higher risk. So fundamentally speaking, factoring is a product where you are lending on a receivable, which is security. That's number one. Number two, why factoring is the most important product in India and why trades is also going up very strongly in India, because factoring is a transaction-based lending. To complete factoring, you need an invoice. Without an invoice, you can't do factoring, right? So A, you need an invoice. B, you need the invoice to be verified, whether it's a genuine or not, right? C, you need to have a collection mechanism in place so that the money comes to you, or you can collect the money, you have a view on the money, right? So these are 3-4 components which makes a factoring the right product. Now, India with the technological evolution, whether it's GSTN, collections, payments, UPI, QR codes, we are just right to use all these components to make factoring right.
Perfect. Let's talk about factoring with an example. You've been a very active participant in the GEM, which was the first pilot. By the way, we are going to be doing GEM 2.0 soon, and it's bigger, better for all the right reasons. Can you just associate your experience of how, in theory, you mentioned factoring and how it works for GEM, and conclude the whole thing where TReDs and Oken and everything coexist with the GEM example, if that makes sense?
Yeah, so I'm sure, because see, fundamentally, GEM is a product, GEM Sai, which you guys started 2021, right? So I think there is no product like GEM Sai in the world. Let me be very honest, as a Oken first product, lending product, right? Because only because of GEM Sai, which came on Oken, we were able to lend to businesses across the country. So how Oken and how GemSci and how factoring can all work together. See, if you want to cover the country or if you want to grow the country, you need to have infrastructure, right? Now, there can be two kind of infrastructure. It's, of course, you need a public infrastructure. So, like, for example, today, there's a lots being roads and, the golden quadrilaterals, bullet trains, all this infrastructure being built up to connect the country and increase the economic value of the people who are disconnected, right? Now, imagine this thing being done by the digital public infrastructure, right? That's where using the digital public infrastructure, the OCAN has made a product which is open protocols connecting all the DPI components, right? And using GemSci as the first use case to go and lend. Because of GemSci and OCAN, the way it's being done, we could lend to places like Andaman Nicobar Islands or Mizoram, Baramulla, Rameshwaram, whatever the country, sitting out of Jaipur. That's number one. The smallest transaction we could do because because of OCAN and DPI as well, right? Now, factoring is a product which can be added onto this entire concept of the OCAN and transaction because in factoring we also get credit insurance, right? So the first case today is maybe GemSci when the buyer is a government. So when the buyer is a government, you have the best receivable. You don't need to question about the receivable, right? So if we talk about factoring, this is the perfect product to do on a OCAN based lending because that receivable is the most sterlingly solid 24 karat receivable, which nothing can go wrong on the government of India, right? So I would say using OCAN and factoring, nothing can beat that product, at all. If we can do it the right manner, that is the best product. Now, adding to the products, because the buyer is important. See, ultimately, as a lender, what you assess is where the money coming from. Giving money is very easy. I mean, if you talk about today, let's say we start with 10,000 crores in the morning, within the 5 hours, we can finish that 10,000 crores to lend anyone in the country, right? So the important point is how do you collect the money and where do you collect the money from, or where would the borrower repay the money from, right? So ultimately, his collections are very important. Which of course in OCAN 4.0, you are connecting all the T4 loans and stuff like that, right? Which is also what we have been doing into factoring exactly, So this really makes sense to use factoring OCAN, in terms of the transaction-based lending.
So for Oken to grow, you feel what are the next adoption points? I think lenders like you are there, and there are many more who talk to us and who are interested. We require many more gems. What do you think? Where do you think where we should apply these? And if you could give some examples of products and some real life case studies, which you are doing probably in one-to-one finance, which can be wonderfully done in Oken in an open ecosystem where everyone benefits, which grows. Obviously, in private capacity, there is only so much of market. We spoke to Bhavik Vasa in the previous thing, and he spoke that saying when the number of participants increase, the market size also increase. What do you think are your thoughts on that?
See, I think if you talk about, there are two kind of volumes which we can think of. In terms of volume, in terms of numbers, and volume in terms of value, right? So those are two different contexts where we can start off from, right? So if we talk about the value part of the volumes, the easiest use case right now is the B2B platforms which are coming up across the country, right? So there are n number of companies today, right, from the Zworks of the world or Infra Market. I mean, I don't want to name the numbers, they are big numbers, into every stream, right, from textile, garment, steel, bitumen. They are doing transactions as a platform, right? Now that's a platform where they are doing transactions. We as a OCAN can open up the entire bouquet of the lenders into those kind of transactions, right? So they have a closed loop right now. We can open up the loop, and there's a bigger value immediately available for OCAN lenders.
So interesting, very interesting that you bring that up in terms of these platforms. Uh, Most of these platforms have lending aspirations of some form, or they are providing lending services in a proprietary kind of integration and things like that. Uh, how do you think, like, what is the path for them to adopt something like okay, and if someone was to do that, because some of them have reached out to us, and the general question is that how do we adopt and how do we go about doing things? But you as a lender, how do you feel, what is the path for them to do it? Because there are a lot of things with respect to compliance, with respect to integrations with respect to negotiations, and tech and product being the least of the things. Obviously, product is somewhere I will hold you to give some samples on the product, but what do you think the path for them is?
I think the first path for them is to see, everybody wants to get into lending. That's a no-brainer. We know that they want to bring next value to their customers is the lending part, right? Now, they would be a borrower agent in the new philosophy of Oken 4.0, I would say, right? So, and the immediate way they can latch on to Oken would be to get a TSP in place, or maybe speak to, I would say, Sagar, and get the entire integration done, because we as a lender, and I'm sure there are a lot of lenders who are already integrated into Oken for gem side, right? And they have tested what Oken can bring to the lending platform, the opportunity which Oken can bring to the platform, right? So the moment these platforms start to integrate with Oken, right, which is not a very big thing to do, it's quite easy. We have done it in the past. We can do it today also. From a closed proprietary loop, they can just open up the options available for the lenders and their borrowers as well. So imagine, I'm sure all these platforms will be having unrated to rated borrowers. That's a whole spectrum of borrowers available, right? Similarly, there are lenders available in the country with a whole choice of the lending profiles, right? There might be somebody who may not be doing unrated, there might be somebody who may not be doing small ticket size. So for us at 1-to-1, we always love small ticket size. That's our core philosophy. We micronize the transactions. And we want to do. So I'll just give you. Can I add a small thing? Why I love micronizing is, for my one of the businesses which was minerals, we used to crush these stones into granules, right? And I learned one thing, that the finer the granules, the more the money you make, right? So my philosophy went across that there's more money into micronizing,
Very
you know, and that's have been our core to understand. And then we learn into the UPI or digital transformations, so probably at today's level we have micronized the money in terms of payments. At 1 rupee, you can do a micronized payment on UPI, right? So if you can do 1 rupee micronized payment on UPI, why can't we do 1 rupee lending or 2 rupee lending or whatever I'm talking about on Oken, right? And we have, with Oken and I spread in place, we have proven that to do 160 rupee loan, STP loan within 10 minutes or 5 minutes, whatever it is, and which all the compliance is in place, right? So I think, so going forward to all these platforms who are doing smaller transaction or bigger transaction, they just need to integrate with the Oken protocols or the APIs, right? And then for them, they open up such a big opportunity. Rather than integrating with each and every lender, they have ready-made 10, 15 lenders right now available to go live tomorrow, or immediately, giving the best. So you know what? I think, can I add one more word over here? I think Oken is about democratizing the lending space. The open platforms, the open networks, they democratize the entire space and give you opportunity with your power of your transactions, the quality of our transactions, so that brings down the cost for everybody. Because if you can have open networks or good quality of transaction, I would say the lender is de-risked, so he may be able to give you at a better pricing, right? Be the cost of, so in fact these platforms would be the originations as well. So the cost of sourcing goes down for a lender like us. I don't need to go and open a branch in, let's say, anywhere else to source my customers, or I don't need to do a collection agency into Coimbatore to collect money, right? So there's a platform who is already doing that stuff, we just need to integrate or take that entire thing with us.
If you're comfortable, I'll ask you a few more questions. But first of
Sure.
all, thank you for mentioning on record that 160 rupee loan transaction. It was not a test transaction. It was done by a borrower. Obviously, the lender now was one-to-one finance. So everyone asked me on when we put it on slide saying that was this a dummy transaction? Was this a gimmick done? But it was a fair transaction that was done. It couldn't have been, because you require a gem ID to do that transaction, and done. But you bring a very interesting point. You say my cost comes down. Obviously, as a result of it, you are more competitive and you give cheaper credit as well, right? If you are comfortable, what is a general credit that is cheaper on gem that you give versus outside? If at all there is a difference in it, I'm not asking for absolute numbers, some guidance.
See, I'll tell you, I could have never, when we started on GEM, literally speaking, so I'll tell you, into lending, there are a lot of components. A, the OPEX cost is important, right? B, there's a risk cost involvement, right? There's a sourcing cost which is involved, right? In terms of a GEM lending or okay, where we started, there was no sourcing cost for us. That's
Sure.
number one. Because of technology, the entire operational cost became, literally speaking, on a transaction level zero. I mean, almost leave apart the credit bureau calls and stuff like that, but almost became zero, right? The only component which was there fairly was a risk component, right? Now, where the money is escrowed and coming from the government of India, almost that was, reduced to as I would say, as minimal as possible, right? So my lending at GEM went down to as low as 12-13%.
As an
Wherein, sorry,
as an NBFC.
as an NBFC, right? Which is as good as near to my borrowing cost. I mean, because I was just lending. I mean, I have got data, as you mentioned, about 160 rupee loan. I have got cases where a single borrower has bought 230 loans on GEM through Oken, right? And that does not even include maybe 1 lakh rupee of the entire loans. So our average lending on GEM is not more than 12-13,000 rupees per transaction of
Very
a loan, right? So any loan is, so operational cost is like, Sagar, let us imagine one thing. Is there an operational cost for credit card transaction for a B2C? Almost zero, right? Because technology and the open and the integration of the networks between the master, Visa, and whatever it is, right? They become the transaction cost to be zero. That's what I think the beauty about the open networks and stuff like OCAN or integrations are important, right? So as compared to, so coming, we have lent to as low as 4, 12, 13, 14, 15%, whereas as an NBFC, my lending starts from 16, 17%, that's the, we know that space pretty well. So that advantage of sourcing or the advantage of OPEX was being passed upon to the customers with a higher volume in place.
Very interesting. Thank you for putting out the numbers. Uh, One thing I keep getting asked, right? You mentioned about democratizing credit. A lot of people associate OKN with UPI, which kind of democratized payments and made the changes. But a lot of time I keep getting asked, and I'm going to ask everyone I end up doing an open house with, is saying, most NBFCs come back to us saying that they are scared that the only differentiator for them is going to be, or they are going to lose this game because there are banks who can have a cheaper credit available to them than NBFCs. And if the differentiator, everyone is on the common platform, there will be no differentiator left. The biggest differentiator will be cheaper credit. And we feel scared. What do you think is the biggest threat to smaller NBFCs? Is it the just the cheaper credit, or is it more to it? I mean, what are your views on this?
See, I think, Sagar, at one-to-one, we have another philosophy. I'll just bring out what you want to say, right? So 1994, Bill Gates had said a very important statement, which was banking is required, banks are not, right? And what has happened in the last, I would say, 30 years is the asset side of the banks, and I'm talking about across the world, has been dismantled. So when I say dismantle, somebody is doing credit cards, somebody is doing BNPL loans, somebody is doing gold loans, right? So if you see, lending is a specialized business, right? Why can't, if let's say Tata Capital has got a number of 2 lakh crore book, right? Why can't Tata Capital do a gold loan? Why only Muthoot is doing a gold loan, right? Or for example, Sundaram or all these guys who have been doing truck financing for 30, 40 odd years from Southern India, why can't everybody else can replicate that? So, lending is a domain expertise space. It's not about credit. My understanding is not about credit, right? The money comes to you once you can create a domain expertise, prove that model to your lenders or your investors. That's where you get a cheaper money. So that's where the expertise of, so we have got NBFCs which are expert into truck loans, there are NBFC which are expert into two-wheeler loans, and now, by the way, there are NBFC which are expert into green loans, maybe green financing as a EV vehicle, even two. So today there are NBFC which are doing two-wheeler EVs. I know somebody who are doing the e-rickshaw financing, and somebody who's doing a taxi financing, right? So these are all three different space, right? So I think the lending is more about the domain expertise rather than the cost of credit, because cost of credit always follows after your domain expertise. It's about the risking or the model where you create the risk-free things, or whatever the pricing, So another very classic example, microfinance in the country. If you're, I mean, we see microfinance 24% with smaller loans, one would say, this money will never come back. It's a high risky model, right? But if you see, they have proven it wrong. Microfinance has been the less riskiest of model in anywhere in the world, I would say, right?
Yeah.
So lending is about the domain expertise. The money comes, money follows. The cost of credit follows,
So what do you think is the biggest threat to smaller NBFCs?
I think the biggest threat to smaller NBFCs would be to get their focus right in terms of what they want to do. So rather than just copying what others do, will not make sense for them. See, let me give you an example. We might love a restaurant which is having a very specific thing, right? That's why we go to a restaurant here. We want to have this idli, and this idli is the best at this restaurant, right? But when you talk about a multi-cuisine restaurant, that's different to that idli wala thing. So a multi-cuisine restaurant might be selling idli, might be one of the product out of 200 products they are 200 menu items they are doing, right? But this idli wala guy might be just doing idli only, and he might be selling idli from, let's say, 7 in the morning to 12 in the noon, right? At a higher price, right? So that's how I would compare a smaller NBFC to a larger NBFC, you know. And based on that expertise, you can add value, you can cross-sell products, So that's what we have also done, if fundamentally speaking, a very small fish in the bigger scheme of things, right? But we were absolutely focused. In fact, one of the mentors who mentored me from day one itself, he said, Ravi, you write on a board, what will you not do? Right? So we instead of writing what will not do because it's a bigger thing, we just wrote one thing, what will we do? you know, Especially in the lending space, it becomes very attractive to do ye kar lo, wo kar lo. We are very focused, we will do this only. So purely B2B transaction based lending, and that's what we do. Anything connected to B2B transaction based, we do that. So whether it's a Oken, whether it's a factoring or trades, whatever it is, we just add. So there has to be two components: working capital, B2B transaction, period.
Great. I'll end with the last question. If there was one thing that you would want, saying that if this happens, it will be very good for one-to-one, good for the lending industry, good for the country, good for the MSMEs, what would that be?
Uh, I think we'll have to. This is a very interesting question, and answering this question, there are two sides of this coin, right? So if you talk about the lending side and the borrowing side, and the MSME side, right? So on the lending side, so let me answer the question on the borrowing side first, right? MSME are fundamentally working capital intensive businesses. They are less on the assets. They are more on the working capital. And when we talk about working capital, for them, the timing is the most important. The money has to come at the right time. Otherwise, it doesn't make sense to come up. If I'm wanting to buy a car, I can wait for 7 or 10 or 15 days, doesn't matter. But if I have to do a supply to somebody where I have a PO available, I can't wait 15, 20 days. Somebody else will do it as an MSME. So for the MSME, the timing is most important. So I think, and how can somebody take faster money? If I go into a bank and I would say, I want 20 lakh rupees, So bank is going to assess me for 20 lakh rupees, which will take a time to do it. Now, if I go to a bank and say, give me 20,000 rupees for this transaction, my guess estimate would be bank would be able to do it faster, should be able to do it faster, because there's a lesser risk involved, right? And I'm asking this money for 20,000 rupees for, let's say, 28 days, right? Not for a year. So that would be a faster thing for me as a wish list from my MSME side. Connecting the same thing from the lender side also, right? If I have to underwrite a loan for 20 lakh rupees, I'm just giving a number, there might be a different policy, matrix, and risk assessments. To underwrite 20 lakh rupees for a year would be difficult and different parameters are involved. But underwrite 20,000 rupees for 28 days based on a transaction would be a different parameters, right? So that is the kind of understanding which comes into picture. And the wish list is that whatever friction is there to execute this at both the ends should be removed. You know, whether it's a digital KYC to be removed on the lending side, or anything on the lending side. On the borrowing side, maybe the quality of transactions or the any transaction. For example, we have spoken many times about the milk dairy case, use case, or whatever it is. So every transaction, every data should be available to be lent on, right? So I think keeping this in mind, any friction which is still in the system, which I think has been broadly and largely being removed, but friction is something which can never be zero. There has to be some friction because there's new friction which comes up, So I think we all should be focusing on how we can remove those smaller friction left out.
Hopefully, Oken is the catalyst that removes the friction, and we see success.
Absolutely, I'm sure. Yeah, yeah.
Thank you for this lovely conversation. It was a pleasure talking to you.
Thank you, Saga. Thank you so much for having me. It's a really pleasure. Thank you so much. Bye. Thanks.